This week on the podcast, Claire answers your questions in a not-so-quick-fire fashion. Welcome to the Profit Cash Growth Podcast. This is the podcast for 6- and 7-figure business owners who are looking to grow a financially successful business. My co-host, Clare Hancott, is a finance director, chartered accountant and entrepreneur. And every week, I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. It's nice to be in a different location this week, isn't it?
I don't know.
What don't you know?
Well, we used to record the podcast at home on a Sunday and it was quite easy to do. And now you've decided that we must go to the office and do it every Sunday, which is nice because we're an industrial estate. So Sunday is the only really quiet day.
The setup is so much better here though, because I can actually sit opposite you and
But now we're in the office
side by side
and it feels like
Sunday.
Work.
Well, we've got other things to do today as well. Anyway, you were delighted today, weren't you, with your attire?
Oh, my new jumper.
Yeah, this is the first time that I'm actually almost a bit sad that this is an audio-only podcast because...
It's not audio only, you can watch it on YouTube.
Well, you can watch some shorts on YouTube, yeah. If you want to see Claire's T-Rex jumper, and I mean that in the nicest possible way, do check out some of the shorts this week that come out on our LinkedIn every day because it's quite something, isn't it?
It's a very good jumper. It's just a jumper with little T-Rexes on. I think it's quite cute.
Okay, all right. Should we find out what's on this week's news story of the week then? So this week, Costa is for sale after Coke is left with a bitter taste. This is the news story that Coca-Cola, who bought Costa Coffee quite some time back, have been somewhat disappointed with their purchase and have now put it on the market for sale.
Shocking.
Yeah. You're not a fan of Costa, are you, Claire?
No. I think Costa... I mean, I'm not a big coffee drinker anyway, so I don't frequent lots of coffee shops. But what I do frequent coffee shops for is lunch and snacks.
Yeah.
And what I would say is, I think 15 years ago, when I first moved to this area and my office was near a Costa Coffee, so I used to go there a lot for my lunches, and I was able to get pretty much exactly the same food that I can get today in Costa Coffee. And I just think in 15 years, that business has not moved forward. It's no wonder that it's not making a profit and it's feeling a little bit run down, a little bit grotty when you go in a lot of the stores and just a little bit same old and boring.
I find it interesting that business so prolific as Coca-Cola, this is what surprised me. I thought they were going to buy Costa Coffee and then, it was going to move forward dramatically. It was going to be next level. And it's like they just bought it. And if I'm honest, from a consumer perspective, the words just left it is all I can describe.
Yeah, because...
Just literally left it.
It was...
no investment in it at all. You would expect them to be pumping huge investment into doing the stores or making them look good. It's getting a bit old now, as you say, and a bit tatty. But
before Coca-Cola bought them, it was almost like a little jewel to Britain and a bit of an up yours to Starbucks, because Costa started to take over, didn't they? They did this deal with supermarkets and you started to be able to, especially Tesco's, go to a Tesco's and there was a Costa Coffee in there. And it really felt quite modern and cutting edge 20 years ago. Yeah, I don't really know what Coca-Cola did and why they've let it go to ruin. It seems, I don't know, maybe with the Coca-Cola brand, because a lot of the Coca-Cola brand is these sort of die-hard fans. You can't change Coca-Cola because people get angry, don't they? And I wonder if...
Oh, you think their culture may be so stuck in terms of you are right, with Coca-Cola it's
well, they've got a lot of other brands, haven't they? And know, for example, some of the stuff they've done with Schweppes, riding off the back of how popular gin and tonics have become and things like that. So I don't think it's necessarily a cultural thing, but maybe they misjudged it.
Anyway, do you know what they paid for it when they bought it in 2019?
About 50 billion?
No, 3.9 billion.
Maybe it's not as big as I think it is then.
So they paid 3.9 billion. What do you think they're going to get for it today?
Half of that?
6 years. Exactly half of that. About 2 billion they think they're going to sell it for. About 2 billion is the...
And I bet they've not made any profit on it in the time they've had it either.
In their total ownership of 6 years, they've made a total loss of 23 million.
Yeah, so basically break even in an organisation of that size.
So basically it's just... So that's why their board sort of sat around and finally pulled the plug, and they've said of their entire portfolio, Costa is the poor performer of it in their annual results this year, and time to go. So do you think it's going to sell to somebody that's going to do something with it? Has it got a chance to be brought back from the brink, in your view? Or Or is the coffee market a little bit saturated? And I mean, they're blaming the market a little bit. They're sort of saying two things. They're kind of blaming like a downturn in coffee sales, which I don't see that.
That's not true, because look at what's happening. Is it McDonald's? Like 25% of McDonald's revenue now comes from coffee.
Some of these places, the biggest coffee place ever. I think somebody's at their lunch, basically. And also the cost of coffee beans has reached a 50-year high. This just sounds like excuse-itis, doesn't it?
Yeah, because the reality is most people going in Costa are not buying coffee. They're trying at least to buy some of the crap things that are in there, like the same old cakes and flapjacks and things that have been in the shelves for 20 years. So if they just modernise that, offered a little bit, I'm not saying they need to go and do exactly the same as other brands, but look what Greggs has done. Look at what Pret has done in the marketplace, for example.
Always innovating. I mean, the problem is with food and things like that is you've got to constantly be reinventing. Like McDonald's, and their menus change every month, and they're just always dropping things in, dropping things out, because people just move on to somewhere else to find their next fix, don't they? It's the problem with the hospitality industry, I think.
So I think it can be saved, but it needs a bit of regeneration. And I'm not talking about the physical look of the shops. I mean, yes, they look run down, but I actually think it's more important that they get the menu sorted, because they're 20 years behind where trends and tastes are at the moment.
Yeah. I mean, I guess I don't think it would be necessarily bought by anybody we know. It would probably just be bought by some investment company, I think. Yeah. And then hopefully they'll just put somebody in that cares about it. I think it probably needs to be... the problem with being in a big stable like Coca-Cola is, do you just get a bit lost? Do you know what I mean? Yeah.
Well, watch this space. Let's see who buys Costa and what happens to it.
Cool. Well, let's move on to this week's deep dive, where we're going to do an episode of Who Wants to Be a Millionaire for Clare, aren't we? So to speak. So, no nonsense finance. Clare is going to answer your questions. So we thought it's about time that we put Clare on the spot. I mean, irony... A blind taste test, a blind question test.
The irony of what you've just said about Who Wants to Be a Millionaire, I think if I can't answer these questions... So I don't know what these questions are. They're questions that have been Simon's collected from some of our listeners and social media contacts. And he's going to quiz me live to see what an FD would do. But yeah, I guess Who Wants to Be a Millionaire, this could make or break my business, couldn't it, if I can't answer these?
It's basically like live business coaching, free consulting from Clare for your business with some of the frequently asked questions that people have asked us. So, should we start with question number 1? So, somebody asked, how much cash should we actually keep aside so we don't run out?
Yeah, great question. So, mathematically, if we live in a perfect world, the ideal bank balance is 0, because every time that you've got a pound or a penny sitting in your bank account is a time where that money just simply isn't working for you. Because when you've got a trusted business model where you have predictable results, you can deploy that money into marketing or something like that to generate revenue. So you don't really want cash tied up in the bank. But we live in the real world, and with the best will in the world, you can have a very predictable business model. Like my business model, for example, all of our clients pay us monthly. So, it's fairly easy for us to predict our revenue moving forward. But even still, we keep a cash buffer in the bank, because you just never know what's going to happen. You never know, what repairs are going to need to happen, or maybe you might struggle to get some goods. Like if you're a manufacturing business or something that uses products, you might struggle to get them, and you might need to pay more money all of a sudden for them, and all of a sudden your forecasts are out. Okay. So all of these things that happen, in the best will in the world, no business is perfectly predictable. So I would say that the most riskiest of businesses in this economic times, keep 3 months worth of your overheads in the bank.
Okay. What would those be at the moment in these current economic times? If you had to chuck out some industries that you think are high risk at the moment?
Well, high risk industries at the moment, construction without a doubt. Construction is always up there just because of the way, it's not necessarily the work that they're doing or anything like that. It's the way that the industry works, that you have this big contractor at the top, which subcontracts to another contractor, which subcontracts to another contractor. And so you just end up with this really long supply chain. And if something goes wrong at any point, it kind of takes everybody in that supply chain down.
Yeah.
So that's why construction is very difficult. So construction in particular, hospitality, hospitality businesses are on their knees at the moment. It's really, really difficult to see. We've just talked about, something like Costa Coffee, and it's no wonder small businesses are really struggling. If the biggest companies
in the world can't make it work, it's challenging for small businesses, isn't it?
Yeah. Recruitment businesses. Actually, I think it's more the business model that makes recruitment quite risky, because a lot of people won't know, but recruitment companies, a lot of them are actually backed by bigger firms that tend to take either a 50 or 51% share in the business, and it's more like a JV partnership. So the big backed equity firm takes a stake in the business, normally provides all the back office functions and things like that. Yeah. And then the person on the ground whose business it actually is that's running it is, just focusing on recruitment. So it's almost a little bit like a franchise model. And that also makes it quite risky because they have these big overheads that have got to be paid to the PE company for all of the central services, and they can't sort of flex their overheads up and down as income comes in and out. And with what's happening in the employment market at the moment, recruitment companies are also quite risky. So, yeah, I think...
Do you think we're in a generically risky time with the uncertainties of what AI is going to do to disrupt every possible industry, or would you not worry about that?
I'm not worried about AI at the moment disrupting industries. I think there are some industries for sure, like marketing companies and things like that. But I don't think that AI is really disrupting the UK market too much at the moment. Yeah. I think it might be disrupting people that are freelancing and contracting, PAs, people that are editing videos, those kinds of people, but not bigger businesses that have got teams of people, because they tend to offer a slightly different package or suite of services rather than just one thing, which is swapping time for money. I think anybody that's swapping time for money, AI is a risk in the marketing sort of world at the moment and admin world. But otherwise, I don't think the risks are coming from AI. I think the risks are coming from the government.
Okay. So if you're in one of those risky categories, you reckon 3 months of earnings? Otherwise,
no. If you're in one of those, I'd say get 6 months of cash in the bank as a minimum. If you're in one of those, but other businesses, as a minimum 3 months.
And if your business is flying, try and get your bank balance to zero and invest as much as possible.
If your business is flying, keep more cash in the bank.
Okay.
Because growth is risky, and actually, the faster growing your business is, the more cash it's going to eat. Okay. So actually, if you're growing, you need more cash reserves. If you're planning to grow and I say rapid growth, so anything above sort of 15-20% growth year on year, I'd say that puts you into a higher risk category. So as a general rule, we keep 3 months worth of cash in my business. That's how we like to work. And if something happens with the economy, like with the budget coming up in October, we might start to try and gradually increase that to 6 months, just as a bit of a buffer. But yeah, if you're in one of those high risky businesses, 6 months. However, I will put a caveat on that and say it is entirely dependent on you as a business owner, where you are in your stage of life, what your personal finances are like and things like that. Because I give you an example, we've got multiple businesses. So if something happens with one business, we can pull some cash reserves and put that into a different business. So we've got lots of options available to us should something happen to one of our businesses. And we don't have children, we don't have a mortgage on our house, all of these things that mean that we can take more risks with our business and hold a lower cash reserve. And so you can see that it's a very personal opinion and a very personal decision as to how much money you do and don't hold in your bank. And there isn't a right or wrong answer. I think from a financial perspective, I can say these are all the reasons why you shouldn't hold too much cash. But if you are not comfortable holding less cash than 12 months, that's a personal decision. And as long as you're aware of the implications of that, and it's a proactive decision, not a default, I didn't know there was a better option, then hold however much cash you want.
How important are business models to deciding how much cash that you hold? I ask this because, there's a big difference between, we've got a number of different businesses, from one that has no recurring income and no contracts, like an estate agency, every month you've got to start from zero, versus your business where you've got long-term customers that have recurring income that, that will be very sticky and are often there for long periods of time. So does that fall more into your thought process?
Yes, because for example, like all of my customers, they sign up to a certain length contract, they're on a notice period, so I can, short of somebody not paying me or like having some significant issue where they say we're not working with you anymore because you're in breach of your contract, I can foresee probably the next 3 to 6 months with a very high level of certainty. Whereas you can't do that. You've got no idea what houses are going to come to the market, and therefore even what your staff costs are going to be and everything like that. So it's very...
Also a bit like construction, it's heavily dictated by the economy and the government sentiment and people and all those kind of things more.
So absolutely, the business model that you've got
should be factored into it.
Does make a difference.
Okay.
Also, the seasonality of the business is another important thing. Obviously, hospitality businesses or even construction businesses are very seasonal. It's difficult to do building in the rain and the snow and the ice and things like that. So all of that comes into it.
Well, for a quick fire round, it wasn't very quick fire, was it?
No, it wasn't.
Okay. Question number 2 that I've got here was same sort of thing, actually, cash flow related. We're growing, but it feels like we're running out of money faster. Is this normal?
100%. Growing costs money because you will have to front load costs. You'll have to front load team costs. You'll have to front load marketing costs. You'll have so many front loaded costs, and you're spending money now in the hope that that's going to generate revenue in the future. So yes, there will be a gap normally. If you're fast growing, so I'd say above sort of 15 to 20% per annum, I would say you'll probably be looking to try and, before you start on that rapid growth plan, try and keep an additional 3 months worth of cash in the bank to fund that growth.
Is there anything that people can be doing with their numbers or forecasting if they know they're going into a high growth period that would help give them, like, I don't know if confidence is the right word, but maybe like help them sleep at night a bit better?
What do you mean?
Well, as in, you know, if you're growing fast and you're throwing money into something, like, my head's always like, as long as I know I'm going to be okay, because I can see the future, so to speak, or I can predict the future. So should people be doing something to give them, you know, confidence? Yeah.
So where people normally get caught out, I see, when they're growing quickly, is that they've always had 50 grand in the bank every month, or their overheads have always been 50 grand. And so that's kind of, they lose track of how their costs and cash need to grow with their turnover number. And so they catch themselves out because they kind of get these numbers anchored in their head, which allows them to make quite quick decisions on a day-to-day basis, but they're not readjusting those numbers as the business grows. So, you know, as that example, they think, oh, my payroll's 50 grand a month. And no, actually, your payroll's now 70 grand a month, and you just haven't upped those expectations. And that's normally why people get caught out. So I would say that if you are on that rapid growth expansion, try not to think in absolute numbers and think in percentages instead, because that makes it much easier for you to keep doing those quick calculations on the fly and be quite comfortable with where you are from a cash and profit perspective as your business is growing and adjusting quite quickly without having to do complex models.
Excellent. Good. So next question. At what point should I hire somebody to do the finance stuff properly instead of me juggling it?
Yeah, so a great question. So day one.
From day one?
Day one, I would say.
That'd be ideal. If you've got all the cash in the world, you just start the business from day one with a full team, wouldn't you?
Yeah, look, I think that it's understanding the different roles in a business, isn't it? So I think from day one, everybody should have a bookkeeper. And when I say bookkeeper, I use that term quite loosely, because actually, this day and age now, you know, go back 20 years, 30 years, when we were doing very complex accounting and handwritten models, you needed to know accounting to do bookkeeping. You don't need to know that anymore. With the likes of Xero, anybody can input invoices into Xero. So from that perspective, your first hire in your business should be normally an admin person to support you, and they can take care of your bookkeeping. So from day one, you should have a bookkeeper, but it can be your admin person that's doing that. And then what you need is a year-end accountant or somebody to just double check what they're doing, maybe before VAT returns are submitted and year-end accounts and things like that. So that can take most businesses up to about £1 million. And then over £1 million, then you are going to need a bit more hands-on support. So that's something that we do with the financial controller package that we've got. We will oversee and support your in-house bookkeeper on a day-to-day basis. And that normally involves having a weekly meeting with your bookkeeper to cover off questions and things like that, especially if they're not a bookkeeper and they're an admin person. It's even more important.
It's difficult, isn't it, for business owners, like at the size when they've got somebody like a bookkeeper or somebody, but like me, I wouldn't have any clue whether the bookkeeper was any good at what they did, or whether they did. I couldn't manage them. So that is quite a challenging situation to be in. You've
got no way of knowing if your bookkeeper's good or not. Like, they could be giving you numbers, and they could appear to look like and sound like they know what they're talking about, but you don't really know. And you know, I've recruited many bookkeepers and accounts people over the years that seemingly have the qualifications on paper, and when you put them down and you do the work, the quality of the work is just absolutely shocking. So yeah, I would say that up to $1 million, have somebody just doing your bookkeeping, and then obviously your year-end accounts and stuff. 1 to 10 million, you need some sort of financial controller, finance manager role, and then above 10 million, you'd be looking at more strategic CFO, FD support.
Okay, excellent.
The caveat on that is appreciate there's a big difference between a service organisation and something probably more complicated, like if you've got
manufacturing,
if you've got physical sites, that type of thing. So that type of thing, you might not get to 10 million, you might maybe get to 5 million and need some more strategic support.
Got you. Excellent. So, next question. Customers keep paying me late. How do I get the cash in quicker without upsetting them?
Yeah, that's a really good question. And do you know what? The main response that I can give to this is about proactivity. Yep. The more you stay on your customers, the more in contact with your customers you are, the more likely they are to pay you on time. If you only call them once a month when that invoice is due, the chances of them, you know, they're just going to fob you off for that first phone call, but they're going to struggle to fob you off if you're calling them every week. Checking in, can I just agree the balance with you? Can I make sure that you've got these invoices this week? Did you get the statement? Is everything okay? Do you need any copy invoices? You just call them from a customer services perspective. That's kind of the angle that you're coming from. But actually your goal is to confirm they've got everything, let them know that you are constantly chasing them and you are constantly in touch with them. You're resolving any of their queries. The other thing
does that have to be done like physically with phone calls as we go into a world of AI and automation and things like this? They're not tech that can do that.
You need to balance the customer. So we do credit control for some of our customers, and some of them we will communicate with email. We know they're very responsive on email, and that's fine, but there's a lot of people that we just can't get hold of on email. They never reply to emails, or you get standard stock email back, and those are the ones that you need to pick up the phone to. So we just simply categorize them so we know which customers we're calling and which customers we're dealing with on email.
Okay.
But you need to think outside the box a little bit with this as well. You know, if credit control is a significant issue in your business, think about utilising some of the technologies like direct debit payments. Also with Xero now, you can take credit card payments on a mobile phone. You don't need any technology or anything like that. Somebody can literally just tap a credit card on a mobile phone. So that's particularly relevant. Like I'm thinking about maybe if you do like electrician services or anything like that, where you're dealing with consumers, you know, you can get payment immediately. You don't need to wait, send them an invoice and wait for them to send money into your bank and all of that kind of thing. So think outside the box a little bit and think of what other ways of paying you there could be other than bank transfer, which generally also helps to speed up cash collection.
Brilliant. Final question, Claire.
Yes.
For today is, what's the one number I should look at every month if I don't want to drown in spreadsheets?
Ooh. Can I give two numbers?
Well, then you wouldn't be answering the question that's been asked. But
well, look, I don't.
Are you going to tell me there's a triangle here and you should never just look at one?
Yes, you should never ever just look at one number. For businesses that are service-based businesses, I think it's quite easy to just look at your headline turnover number because your overheads will generally stay quite consistent. So if you know your overhead number is 50k a month, you can roughly work out what sales you need to do to break even. So from that perspective, a service-based industry is quite simpler. If you do anything else where you have a cost of your sales, so you're buying products or anything like that, then you need to understand either your gross margin or we would generally call it the operating margin. So strip out all those overheads, you know, what are the costs of actually doing business? So let me give you an example where we have like self-storage businesses that we work with. I think we've got about 8 self-storage clients in our books at the moment. And for those, we say, what is your operating profit? And that's all like their property costs, the repairs and maintenance that go into it, all of that kind of stuff. What margin is that every month? And then the other number that I would say is you need to understand how much cash has flown in and out of your business every month. So you can look at that as a percentage of your sales or look at that as absolute numbers if your sales number's fairly static. And keeping track on those numbers would give you a very quick snapshot that would say, am I healthy? Am I in trouble or not? And then from that, you need to deep dive.
And that's a wrap.
Jesus.
Round of applause. Oh,
the stress.
You look a little bit exhausted.
You're like,
I know you don't like being put on the spot. That's the thing that's quite funny about this. This is why, should we do this again in future, do you reckon?
I've always been good at exams. That's one thing that I have been really good at.
Without studying in advance?
Yeah,
that's true.
No, that actually is my sort of...
Amazing. Well, you know, if we get enough questions in, we might do this like once a month or something. So if you have a question for Claire that you'd like answering, drop it on an email to marketing@profitcashgrowth.com. I'll pick it up and I'll keep hold of it until we've got enough to perhaps do another episode with people's questions.
Absolutely.
Sounds good.
Did I pass?
I don't know. The problem is I'm not an accountant, so I don't know what the right answer is.
No, but you're a business owner. Would you have been happy with some of my answers?
Yeah.
Do you think that did harm to profit cash growth, or do you think we might be millionaires after all?
What do you mean?
You said Who Wants to Be a Millionaire, didn't you, at the start?
Okay, I see what you mean.
It's like boom or bust for the business, wasn't it?
I don't know the amount of cash I'm now holding on to. I'm never going to get any of the money in my business, am I?
Yeah,
so.
It's difficult times, though. Difficult times. You've got to be prepared.
Don't fall into that trap. You sound like everyone else's narrative at the moment. Difficult times. Right, let's move on to this week's Profit Cash Growth Extra. So this week, Claire, I came across something. I was looking at. Let me tell you the backstory of this. Because basically, we've had a complaint and we need to deal with it. We need to interview one of our members of staff about the situation.
In your business, right?
Yeah. I mean,
in your estate agency.
Just to be clear, I mean, we're absolutely not at fault at all. People complain all the time. Basically, it's a really simple one. Somebody's found something in the legals and they've spent some money on a survey and they just like want us to pay their cost of their survey back. It's just like not how the housing market works. That's the reality, as we know. Like, you go into it knowing that, you know, you might lose money and things might happen. So anyway, we wanted to do an interview where we could pump it into ChatGPT to help us with the response to it. And I didn't realise that there's an audio recorder within the Notes app on the iPhone that actually, when you record directly into the notes, it transcribes it as you're recording.
Brilliant. So it's a little bit like, so when
and
we
the
want to do that,
is really good as well.
We do that with like Teams or Zoom call, set it up on that.
Exactly. But like if you wanted it like discreetly in a meeting, like someone doesn't know you're recording it or something, so you can have it you put your phone on the meeting table, you can just record it. It's transcribing it as it goes. So you can literally just copy it straight out of the notes into like ChatGPT or whatever else. Say, here's the transcription of the meeting we've just had. Can you build this into the response to the complaint and help me construct a response? So that's what I've come across this week. In fact, I'm starting to realise like there's loads of stuff you can do in the Notes app that I didn't realise. Like ever since I realised you can use it as a scanner as well, it's just changed my world. So
I like to record stuff on my phone rather than on a laptop if I'm doing like a one-to-one with a team member or something like that, because it means you don't have to take notes. You can really focus on what they're saying. You can look at them. You can note their body language, all of those types of things. If you're sitting behind a laptop or anything like that, or even taking notes, it just feels like a barrier to really having a good one-to-one. So that's going to be one where I now start probably using the app that you just talked about, because I was using a transcribing app.
This is game changing, is it? From the old sitting in meetings, taking notes and not being fully present with the meeting or being able to properly, and now I'm missing things, to be able to just literally record and transcribe everything and then get it summarised. I mean, it's for me, that's the game changing thing here. It's just remembering to do it all the time. It's like you always forget. But anyway, thank you for joining us for another week of the podcast. Hope you enjoyed that. If you do feel like you may have outgrown your current accountant, you'd like to speak to Claire and the team at Profit Cash Growth, you can go over to the website profitcashgrowth.com. On there you can book a free discovery call to have a chat about any challenges you've got and what the solutions might look like. And as always, please rate, review and subscribe or follow the podcast wherever you listen to us. And as always, we will see you again next week.